Investing is fun, but the return may be bitter sometimes. People say, in a bull market, everybody is a genius. I ask you, what return did you make in a bear market? More often than not, the answer is a negative return unless you are out of the ordinary. But that is part of the investment, no complaint. I always recommend you set the investment return goal before you start investing. When you think of a return that you like to make in the stock market, what return comes to your mind and why? Have you ever thought about that? I know it's not an easy question. To answer this, you must know what other people are making or what is the average return in the US stock market. You are at least as good as an average investor if you can make that return. Historically, the return on the S&P 500 index is used as the benchmark because it represents the entire US stock market. You should try to make a better return than that of S&P 500 to generate positive alpha. People say you can make about 5 to 7% average return in the long run if you invest in an ETF such as SPY, which tracks S&P 500. In other words, you can make about 5 to 7% long-term return in the US stock market. I am now taking to a website to calculate what return S&P 500 gives you with all the dividends reinvested. Just Google S&P 500 return calculator. You will land on this page. Here you can set the time frame of your choice and see the average annual return with or without inflation adjustment. For example, let's calculate the return between January 2000 and January 2022. As you can see, the average annual return during this period is only 5.539% without inflation adjustment. However, the return is only 3.156% with inflation adjustment, which is even worse. Of course, investing in the index via ETF would be a passive investment, the return of which is typically low, but it's lower than many people can even think of. So if you ever see any person saying, I would just keep buying SPY or dollar cost averaging on SPY, I do not care about a market crash, or I'm a long-term investor, share this video with them. I'm sure they will be surprised to see such a low return. Bottom line, you are unlikely to make your fortune by just keep buying SPY and claim that you're a long-term investor. Market drawdown is irrelevant for you. I guess the point I'm trying to make here is US stock market indeed makes no more than 7% return on average in the long run. Those index investors who are pouring money on SPY today don't have any idea what the future holds for them. So, know this side of passive investment ahead of time and do not be disappointed when you are ready to retire at the age of 60 or 70. Thanks for watching this video.